Hey, welcome to the Closing Beat, everybody. Happy Monday. How we doing out there? Hope you're having a good day, had a good weekend. You're ready to get to work. We are financial advisors here with Jazz Wealth, and this is called the Closing Beats, quick stock market update show that we do to cover the stock markets. A little homework or housekeeping, if you will. If you want to play Guess the Dow, it's a game that we're playing. jazzwealth.com/guess the Dow. You can take a shot. Tell me where you think the Dow is going to close next week. Closest without going over. Win a $100 gift card like our winner last week chose the gift card. They were not a customer, so they won. And yeah, you can play along. Let me know what you think. No strings attached. We don't play games like that. Also, got a couple update type things to share with you here. I'm going to run over to this real quick. If you're one of our customers or one of our research members, you have access to Notes from Jazz. It is an archive of all the weekend emails that we send out. We're big on data here, so a lot of times you're going to see a lot of data. I try to break it down simple to start and then get more and more and more detailed as we go. Anyways, last week was kind of cool. We talked about last week being a very muted time period in the stock market. We showed all the geeky data to show that and how last week tends to be kind of quiet. Well, actually, last week we had that. S&P was basically flat. A lot of that changed today, but last week actually played out just as it should in the stats there. So if you want to take a look, read through some of the archives there, or catch this weekend's email, you just go into your dojo and you should see the Notes from Jazz in there for you. I hope that helps you out there. All right. As far as the stock market today, that data is correct. It's a pretty nasty day. We're going to go over it all today and hopefully teach you some new stuff today as well. It's kind of a weird day, right? I mean, the headlines all said that the higher case count averages and everything, hospitalizations and all that great stuff was the reason the markets were selling off, but we already knew that data. Actually, that was something that we covered in our Notes from Jazz over the weekend there. I made it a point to actually point that out because we noticed that. I mean, it was already in the news there over the weekend. So, got to go back actually, over here, over there. So we actually made it a point to put that in there and kind of talk about the hospitalizations and everything. And it was just really weird, right? How it worked out. Like we already knew what the data was, but that's what we were being presented with today. So I'm not sure. I'll share some of it with you here today if you're interested. Here's some of the data that was being talked about. Cases per day, obviously on the upswing, hitting higher points overall. A lot of people saying, hey, it's because we did more tests. If we normalize that data and take a look, more tests equal more cases. Yeah, you could make that argument. The number of tests administered day by day is actually in the orange in the background, and the purple is the cases per day on a percentage basis, so that the charts line up there. And basically, yeah, you have more cases or more tests being administered, meaning more cases being caught overall. Whether you agree with the data or not, that's what you have. One thing that I found interesting was the hospitalizations. That was not cool. We saw a little bit of an uptick, which I pointed out to everybody. That one's going to weigh a little bit on the economy going forward, overall hospitalizations. The issue is hospitalizations don't necessarily translate to more deaths. The total number of deaths overall is consistently and steadily declining. I believe today this is one day behind. I believe today we actually got under 2%, sorry. And so it's a tough time for data, right? The stock market in the sort of media cycle right now is all about these cases going crazy, but I mean, it's sort of news that we've already known. I'm not really sure about that one. That's a tough one to kind of see there. But anyways, the stock market today, we'll go over it and see what we've got. You could see it all just a beat down today. We'll go over and look at the S&P first. S&P, sixth time this year where we've lost 2%. We actually were down more than 2% before lunch, actually. Only one time, if you look back, all the 2% losses year to date here, only one time did it not bounce the next day. That was on September 3rd, where we lost 2%. We did not bounce back the next day. We lost 3.4% on September 3rd. The next day, we were down another 0.8%. Every other time, we were positive, which is where we get the term Turnaround Tuesday from, if you're curious on that one. The average bounce following a 2% decline is 0.86%. So the average bounce, obviously at least a small bounce. That doesn't recover everything, but that's where we're at. The good news is if you have a 2% decline, if you look back all through history, if you have a 2% decline, you want it to happen on Mondays. We've covered this numerous times. The average Turnaround Tuesday bounce, once the Monday is down 2% or more, is a bounce of 1.17%, and it happens 67% of the time. Leads the argument for, hey, maybe tomorrow we bounce just a little bit. We'll see. We started bouncing there towards later part of the day and after hours, but we'll see what we have. Utilities was the area that held up the best today. It was still, well, it was flat actually. It only lost 2 cents. for the day if you're looking at that. A couple stocks that stick out inside there. American Electric Power actually had a good day, was in the green there. Con Edison, which is known for being less volatile this time of year, up 1.4%. And so that was kind of notable. Also, I want to point out Kroger bouncing off the 200-day moving average. That's a notable place as well, or a notable stock as well, given the whole virus sort of talk and everything going around there. The Dow was the worst index today. The Dow actually lost 2.3%. It's back to negative year to date. Your biggest drag were your biggest priced stocks, highest priced stocks. You got United Healthcare in the mix. You're going to have Salesforce likely as well, getting a little extended in the short term as it breaks through the 50-day moving average. Still a very strong stock, just happened to pull back today with all the weakness out there. Also Home Depot, which has been really strong as well. That one pulled back today. If you're looking at the Nasdaq today, it held up the best, and that's going to be thanks to virus stocks. Virus stocks being stocks that are not affected so much by the virus news. Case in point would be Zoom. Up 1.25% on the day, but did trade off of its highs. You had some biotech stocks in there like Regeneron Pharmaceuticals, up 1% on the day. Citrix, you may expect, they had a little bit of a bounce after a pretty nasty week last week. And the gaming stocks. Take-Two, slight gain, not great, but just a slight gain on the day. The Nasdaq is still up over 30% year to date, so today's pullback, it doesn't really cause you to do anything different. You probably aren't adjusting any major positions there unless earnings are coming up. You just don't have a lot going on there. Speaking of earnings, by the way, earnings season is upon us here, and it's a really good one so far. It's so interesting. We did a whole post on this to talk about it, but earnings season, so far, 85% of the stocks that have reported are beating on earnings. We are typically at 60% at this time here, just under 60%. So we're beating historical average. So right now, given how far we're into earnings season, typically we're at about 60% beat rate. We're at 85% beating on earnings. We have never, ever, ever seen a number this high before. That's really good, right? 78% are beating on revenue. Typically, the historical average, looking back over 20 years, is 61%. Also, guidance is higher than ever, meaning more companies are more optimistic about the future than they have ever been in their entire life of tracking this data. So, kind of interesting that the stock market's not really responding to that, and also the stocks themselves are not responding to that. The average stock is actually losing despite beating on earnings. Anyways, that's enough of that. We got some good videos for you this week. Our FinTip series on YouTube. Today, we started off by looking at GDP numbers coming out on Thursday. Will they affect the market? If you like the geeky data type stuff, you're going to like that study. I gave you everything, man. I just threw it at you on a Monday. See what you can handle there. Will the GDP numbers move the market? In other words, historically, do they move the market? If they beat expectations, do we have a great day? You have to check out the video, but I think you'll be surprised. Also, we're going to do on Wednesday Biden's tax plans versus Trump's tax plans. Not political, just spare me the political comments. All I'm doing is comparing one to the other. Obviously, Biden's plans are subject to change. We don't know, it's just that. Trump's plans are what they are currently with the tax plan that's out there. We're just comparing the two because if you're planning, which we're doing that a lot for customers right now, you just want to know, what am I going to do if Biden wins? What am I going to do if Trump wins? Thank goodness we're going to find out soon and we can put this all behind us and start focusing on the holidays, which hopefully will be fun. Friday, we're actually going to do a really interesting sort of strategy that we did with a customer to explain how they could reduce their taxable income and yet still not contribute dollars to a traditional IRA, not have to deal with the whole 401k and all that. Really kind of an advanced thing there, so I hope you enjoy that. On our research site, jazzwealth.com/research, we hit you with it early. We like to do that beginning of the week there. I hope you're ready for things like this. If you remember, it's $13 a month if you want to join and you can't be a customer of Jazz. It is free and included for all customers of Jazz here. Today, I got a post, Cody's got a post. Mine, we did which of these energy stocks is likely to rally. I'm going to share some of that with you here today so you guys have some helpful tips as well. And Cody took a look at a couple different virus stocks that you maybe have not considered there. Also, this week, I'm going to do a video. I don't remember who it was, I'm sorry. Whoever posted it, there was someone that commented also that they would like the study. We're going to do a video on what happens. So we did a post in the research section that how does the worst sector of the year perform the following year? And so we looked through every worst sector for every single year and said, what did it do next year, and so on and so on. Is it worth buying the dog of the year? This year would be energy. So would you make a profit by buying the weakest sector? Well, someone commented, hey, what does the weakest sector do in December? Because of tax loss harvesting. Does the weakest sector going into December actually sell off because of people tax loss harvesting for the rest of the year? So I'm going to do a video on that one because the data is just so much there to share. So that'll be posted on our research site as well. And thank you for that suggestion, by the way. That was a really cool one. I thought that was a good suggestion, and we're definitely going to cover that. All right, let's go to your sector breakdown. Try something a little different today. Perfect. It showed up nicely. So here we're looking at all the different sectors. It's a little tool that we're building, getting ready to offer this to our research customers and, of course, our customers. It's a sector breakdown of the entire, sectors in the S&P 500 there. You take a look here. You've got the one-day performance. Looking down at the bottom, you got energy as the worst performer. That's going to be in green over here. Energy was down 3.6% today. Every stock was lower on the day. It was just a horrible one. If we look at some of the stocks in that category, you got CVX. CVX was down 2.25% today. ExxonMobil also down 2.33%. Those two make up about 50% of the weight of the energy sector. So you can kind of understand why that was down. Basically, where those go, so go the rest of them. You look at industrials, they were down 2.5% today. We can actually zoom in and take a look at the performance throughout the day. It was nasty. Every sector gave you at least a little bit of a bounce at the end of the day. Some of that bounce came because the airline stocks, which were just beaten to death today, Alaska Airlines down 7%, United Airlines as well, they came off the bottom just a little bit. Everything else in the sector also coming off the bottom, and that helped as well. JetBlue, just a touch off the lows today, but it was down 6.5%. They report earnings tomorrow, by the way. That one's going to get some attention because that's the last of sort of the bigger name airlines to report. Basically, every stock in that category was lower today, that sector, besides Northrop Grumman. A little bit of a bounce there, kind of like this here. If you look at this uptrend, it's not perfect, but you got a little bit of an uptrend here. It's bouncing off that technical support area, so that one stood out as kind of interesting. If we go over and look at something like tech, Tech down 2% today. We'll just show all of them again so you can kind of see the performance. Everything coming off the lows towards the end of the day. That's a good sign leading into a turnaround Tuesday. But tech was one of the weaker ones today, 2.2% down. When you look inside there, you're going to see Microsoft down almost 3% on the day, and Apple. These two were the biggest drags, although Apple did finish positive there. It equates to about 45% of the XLK overall. The stocks that held up the best today, your semiconductors. Come on, you got to be looking at the semiconductors here. I've said that a million times. AMD actually finished positive by 1/3%. Akamai finished down only about 0.5%, but right there at the 200-day moving average. I know I'm throwing a lot out you. Hang in there. And Micron down a little bit. Not quite as bad as the market. I noticed semiconductors in general, some of those stocks really held up. Not all of them. Here's the semiconductor industry. If you're looking at the ETF SMH, nice little pullback. You're happy to see it, but a lot of these stocks held up. And generally, that is your sector breakdown for the day. If you look back, you want to look year to date, there is no arguing you've got energy down. There's a 30-point spread between energy and the next worst sector that's out there. That's the financials, right? So the video in the research section that we're going to do is, hey, what if you bought this one? When do you buy it, right? Do you buy it right at the end of the year, right? Should you buy it later? What should you do? Or earlier? Do we have to worry about tax loss harvesting causing pressure on the energy sector? Anyways, we'll take a look at that, and I hope you enjoy that one. New highs and new lows. You can imagine probably not going to be a lot out there. Many stocks in the S&P are far away from their new or from lows. So one bad day is not going to make a whole big list of new lows. There's a handful of stocks that are very close, and in fact, those did hit again today. You got Gilead Sciences down 1/3%. That one has been on the new low list for a while, and Biogen finally broke down, hitting new lows. A couple stocks that hit new highs won't really matter because they all pulled back. Algen, which is one that we own in our large cap stock portfolio here, we're excited about that one. It's just too far. It went too far too fast. It's okay. We're happy with that. Likely pulling back from here and has already started to pull back. All the other new highs did finish lower on the day. Twitter just barely made it up there. And TYL, which is kind of an interesting software company, down 1.33%. It's been one of the stronger performers overall in the S&P. So there you go. If you're interested, number of new lows, the yearly record. What is the yearly record for the number of new lows in one day? It was actually on March 13th, actually. 336 of the S&P 500 stocks hit new lows. That was just back in March. It was just March. That many stocks there. So that's the record. We've got a long way to go before breaking that record. All right, let's take a look at our watch list here today. I told you I'd help you guys out. This is going to be part of what we talked about in the research site there. What we're looking for here today is the energy stocks that are outperforming the sector. Should you want to go buy stocks in the worst performing sector, what are some good ideas? On the research site, did a full overview, the entire thing, went through all kinds of good stuff. It's already posted up there if you want to check it out. But let's get started. I've got some here for you here today. We're going to start with Cabot Oil. There we go. Let me pull up my little cheat sheet there. Cabot Oil is officially the best performing energy stock in the S&P 500 energy sector, if you're interested in there. Was up 13% year to date. It's going to be closer to 12% year to date. It is also the cheapest on a fundamental basis with the best performance. So that's Cabot Oil. You got Williams Companies here. It's kind of been a snoozer lately, but over the last month, it hasn't really done a whole lot, 0.15%. Now it's going to be a touch negative after today. It's down 15%. On the research site, we actually showed the sector with all the stocks and the break points of where they beat or outperform versus underperform. Energy's down 50% year to date. Williams brand's only down 15%. Now this one's pricey. On a fundamental basis, this is one of the most expensive. It's the second most expensive on the list there, so something to consider. You got an 8% yield. Maybe that'll get you excited. I don't know, but keep that one in mind. The most expensive stock on a fundamental basis is Kinder Morgan, trading at a 260 PE at the moment. Last month, it's had a decent run. It's almost gave all that back by now. Today being down 3%. It's got 1% to go before it's erased all of its 1 month gains. It's only down 39. That's funny to say. It's only down 39% for the year. Yeah, not so bad compared to the 50% in the energy sector there. It's also one of the least volatile. The Kinder Morgan as a stock is currently trading at the same volatility as the energy sector. So if you were to buy the sector, that means you'd be buying all the underperformers as well. You'd be getting a slightly smaller dividend yield. Kinder Morgan got an 8.2 yield, a little bit higher after today. Same volatility, a little bit better return overall, so something to consider there. Chevron, one of the bigger weighted stocks, as I just mentioned a minute ago, in the energy sector there. Chevron basically flat over the last month. You can see it on the charts there. It's down 39%. We'll call it 40% now. This ranks as the least volatile stock in the energy sector right now, and so something to consider there if you're taking a look there. It's holidays. You got the Hess truck coming out soon. Do they still do that? Yeah. They do the Hess truck. All right. I was just singing that the other day. I swear to you, on Saturday night. Yeah. Yep. No, I was singing it. I got a fresh bottle of Old St. Pete. I was singing the Hess truck song. Anyways, Hess Corporation down 5% on the day, but this one's only down 41% year to date. It ranks as one of the higher, in terms of volatility, it ranks as one of the higher volatile stocks out there and has the lowest yield out of all the stocks that I'm going to mention, assuming that they're still paying it. All right. You got Pioneer. How many did we do? I'm just going to go down the whole list. Pioneer Natural Resources here. So this one down 43% year to date. You can see we're getting closer to the 50% overall. It's had the biggest pullback out of the list so far over the last month. So if you're saying, all right, I see energy stocks have had a little bit of a bounce, I want the ones that have pulled back but are still stronger, this would rank as that top one there. It's pulled back about 2%. If you include today, it's going to be about 5% over the last month there. Still down 43%, and keep in mind, it is one of the more volatile ones on the list. Lastly, we got Baker Hughes. The full list will be on the research site if you're interested. Over the last month, up 7%, give back 3% today. Well, a little bit, yeah. It's down 44% year to date, and this one's going to rank as one of the more volatile ones there as well. Prior to today, it had the best performance out of almost every other stock on the list. ONEOK actually ranks as the stock with the best performance over the last month, even after today. So there's a breakdown. It's obviously kind of meant as a teaser for our research site. I think you figured that out already. But I did a full breakdown of that on the research site, along with all the other stocks in there as well. The scroller not working, me. Scroller, buddy. Where you at? Oh, he's figuring it out. He's figuring it out. All right. See, I'm right. See where I'm at today? I'm not over there. Usually I do the show from way over there. See how far it is? But I got my guy right here. He's going to fix the scroller for us. No, not going to fix the scroller. Okay. Don't read the scroller. All right. Let's move on to stocks in the news. If you have questions, we will try to answer them there. I'm going to cover a few stocks in the news. We'll let the stream catch up a little bit, see what we can do, but feel free to post your questions now. First up on the list, Hasbro, down 10% on the day. Well, that's not good. Beat on earnings by 27 cents. Revenues came in better than expected. Yeah, it must have been something on the earnings call there. E-commerce efforts there. Okay, they're trying. They got a nice little pop in their e-commerce type profits there that they've been trying to work on. It's been some time there, but they're trying. Anyway, stock was down on the day. Coca-Cola. This one we mentioned last week, actually. So Coca-Cola got a positive article out of Barron's this week, said this is an underappreciated company. They're also getting rid of a lot of their hydration products. They're getting rid of a lot of their underperformers like Tab. Tab's gone. Did you like Tab? You ever have Tab?
I don't know Tab.
Tab, the soda?
Never heard of it.
Kids these days. Okay, so Tab's going away. Anyways, Coca-Cola didn't shake it off today. It was still down a little bit less than the market, so not too bad there. Johnson & Johnson, remember they had that issue with their COVID. They stopped their trials because of one person, I think 2 people got sick, quite sick actually. They said, all right, we're going to start trying people again. I don't know how they're going to find people to try that stuff, but so that was good news for them. Stock was still down with the market being down, but not quite as bad as the overall stock market. We look at Otis. You might recognize them from the elevators. That is the one that we've been hinting, hey, it's trying to break out there. It did pull back today, but look at the recovery towards the end of the day. Everybody went for the relative strength stocks. Otis was one of those. Great big bottoming tail for Otis elevators. That's how I'm sorry, it's not Otis elevators. Otis, that's what I say. Beat by 13 cents, revenue's better than expected, and raised guidance. Here's another great example of a stock that did great on earnings and still sells off. That's crazy. That's what's happening this earnings season. They're all beating and doing really well, but the stocks are still just a little bit lower there. Also, bad news overseas overnight there. You got guidance out of SAP. The stock was down 23%. I attributed some of today's early sell-off to this, just thinking like, all right, here's maybe the start of some bad earnings. They lowered guidance. They said we're going to have some issues on Europe locking down again. Now, you want to talk about some bad virus issues. They got some issues over there. There's no doubt about that. But that one was down 23%. It's going to be one of the worst performers out there. Anyways, moving on here. Earnings tomorrow. BP, Caterpillar, Corning, Owens Corning, Eli Lilly, 3M, Merck. You got Sherwin-Williams, Aflac, Akamai we talked about, and Microsoft will be one of the attention grabbers there towards the end of the day. I will try to take your questions and see what I can do. Let's see what we got here. I love it. And did I cover everything? Yeah, I did. All right, cool. Cool. You feel where to, do you feel where to try to play energy, you would avoid an ETF and do more direct play without forming stocks? If I had to do that right now, I would not go with the energy ETF or any energy ETFs, and nor are the larger investors. You can look through their filings and everything. They are not choosing broad-based investments. They are honed in on individual investments, individual stocks themselves. It's definitely a stock picker sector at the moment. Yep. Chris says, hey, Dustin, if Tuesday doesn't turn around, what's the next point of resistance you'd expect? The next point of support, what you're talking about there, you got about 3,300. If you're looking at a chart, that's a ways down there. So you're talking about shaving about 100 points if we continue to see pressure to the downside. So it's a tough one. Yep. Young adults would rather get a puppy than a baby these days. Yeah, that's probably true.
That's true.
That's true.
Absolutely.
Yeah, I would give him that one. Yeah, that's a fair comment there. 2 items, Mr. Horton. New home sales, not good. Yeah, they missed a little bit. Yeah. China stopping. Yeah. So got some issues. The international news there, not too good. I don't know. Did you have a question about that, or you just wanted to share that? New home sales did miss a little bit. They also, if you look inside of different ratings for the home builders, you could use Barron's over the weekend if you read it, or just look up the different home building stocks and you'll see the news attached to it there. New home sales down just a little bit. Keep in mind they've been off the charts, right? So it's kind of like the stock rate, or like this sector. We got the home building industry put up here on the charts. They've kind of been doing well. So they are pulling back in here. It's totally cool, totally normal. Think of new home sales as the same thing. They can't be a rocket ship forever. So I'm not alarmed by that today, by the miss, but certainly stocks did get a little bit of repricing because of that. Yep. Oh yeah. General overview for the next month. That's right. Yeah, we can do that. So we're going to do stats on next month. So bear with me for just a second. I'm going to make sure I don't forget that. We'll take a look at November. How does November perform? And if I just make a note here, I definitely won't forget. We'll get all that data. November, we'll just do that. Overview. Okay, that'll be on tomorrow's show for going over some of that data because you're right, the month's basically over. That's how fast life goes by. Yeah. Since the stimulus check's very unlikely to happen before the election, I would say it's not going to happen before the election. There would have to be a continuation of the decline in the stock market, very much like you see, and it would have to just pretty much all happen tomorrow. You wouldn't necessarily get your stimulus by then. Maybe they could agree on something, but I don't see it happening either. How soon after do you think we might see something actually passed for the elections? It's a tough one. I think it depends on who wins, right? We're as divided as we can be right now. It is typical election season. It's just a guess on my part. I have no idea on that one. I don't like to guess. Yep. Jason, can you explain after-hours trading for me? It's like trading during the day, but with less volume, and it's after hours. Yep. So it depends on the stock. Not every stock participates, and they go until 8:30 in the evening. You don't want to trade that late at night, but typically the action takes place in the first hour and a half, and then after that you do have the ability to place orders. If you're using any of the main brokerage firms that allow you to do that, you cannot place market orders. You have to place limit orders. I'm just trying to think of everything I can tell you about after-hours trading. Watch the spread. Depending on the stock, you probably don't want to trade. The spread is typically a lot wider, so you definitely want to place limit orders. It's just an option to get rid of positions after hours, usually because of earnings. Like Apple reports on Thursday. There'll be a very active after hours. Other than that, it's usually news-driven for anybody to take any action. Yep. We got a Halloween mask on? Yeah, we do got a Halloween mask. Yeah. A piece of crap, by the way. I'm so disappointed in that. What a waste. Tab is gone. Tab's gone, man. Stock up. You want to get your pallets, you could sell Tab soda in 30 years and probably get $50 a can. All right. We're getting to that point in the show where I'll probably say something I shouldn't. So we're going to wrap it up. Appreciate you guys hanging out with us here today. We'll be back tomorrow, of course, to do this all over again. And thank you so much for your support. Enjoy the rest of your day.